Ladies and gents, your course educator here. Without any waste of time, kindly read the disclaimer here. You may pause the video if you feel like it. In this case, I'll proceed. Welcome to Unit 2. In Unit 2, we have Part A. And in the Part A here, we'll be talking about these 4 key factors that will help you understand the movement of the market into details. Please don't mind my level of speaking. I'll make sure to speak as fast as possible so that I may not bore you guys. Okay. In Part A here, we are going to be talking about 3 different phases of the market. We are going to be talking also about fail to return candles, which is abbreviated as FTR, fail to break, FTB, flags, we have bullish and a bearish one. Okay. So here is a scenario that I want us to look at right now. Suppose the market was somewhere down here where you see this laser pointing, and it happens that the market rises. As the market rises, I want you to know we call that a rally. And then that was a trend, and then consolidation, and then another continuation again of the previous trend. Okay, so in this case, what you just experienced is impulse, correction, impulse. And those 3 terms, actually 2 of them, those 2 terms are the terms you are going to see in the market becoming alive each and every day, as long as you look at the charts. Okay, so we have here what we call the rally, and then we have a base, which is a consolidation, and then we have a rally. In this case, the rally is the continuation of the trend that had started below. Okay, now here on the base, which is the consolidation, we call it a base. Okay, so every time from now on, if you hear me talking about a base, just know that I might be referring to something that has to do with a consolidation, or rather take it as a decision point. And I'm going to explain to you why we call it a decision point. Well, I'm just going to give you an illustration here that I hope it makes sense. Okay, suppose you take a ride and you decide to go to town and maybe buy your kids, or maybe yourself, or maybe one of your loved ones a precious, wonderful gift, and then you take a ride. Okay, as you are taking the ride, you are approaching a point whereby you still have to take another ride. You know, those journeys where you have to take 2 rides in order for you to get where you want to be, you know, your destination. So in this case, what happens is you get to a point of decision. You take a ride, takes you from point A, puts you at point B. When you get to point B, which is the base, we call it a decision point. You sit and think, why do I all of a sudden have such a feeling? I feel like I forgot something at home. Okay, you know what? Let me decide. Am I continuing with the journey, or am I continuing to like chill a little bit, or should I go back? And then you decide, okay, let me just go forward, because if I go back, maybe, you know, it's something that you can, find it when you come back. You don't need it where you're going. Or maybe you have an alternate, something like that. So, and then you move, you go forward. You see what happened? You took some time here. You thought a little, and then you made a decision, and then you broke out to the top, which means you went forward. And again, remember, if by any chance you are watching this video right now on YouTube or any other platform, and this is the first video you see in our course, please know that there are other videos prior to this one. Please go and find them under our name, Onyx GM Analysts. Okay, you can find us in various platforms, especially the social media platforms. Yeah, now let me explain to you something here. just after the market broke this high here, it came back to retest. Okay, that was where you were going to buy. That is where you're going to buy. Just after making this purchase here, you decide, okay, where do I put my stop loss? Remember what I said in the previous videos, you should normally put your stop loss on the most recent low if you are buying. And in this case here, our most recent low was this one. So we put our stop loss below the recent low, and then you take this distance that the market traveled from this point where it turned from. I don't know where it was coming from, but then here's where we see the market coming from. It went up, started being in this choppy kind of phase. Then from there, you are going to take this distance, and from that top side of the breakout to the upper side, that's where you will take this distance, put it there, project it to the upside, and that is going to be your target. I hope that makes sense. Okay, now here's what I'll do. I'll let you solve all these mysteries that we are looking at right now, and I'm gonna give you only 5 seconds. TikTok. Time waits for no man. Okay, sure. What I needed you to do in that case was to identify this here as a drop, base, drop, as I have already written it for you. And guess what? It has the same psychology as the rally base rally. But in this case, of course, it's happening in, remember last time I spoke something about reciprocal, right? That kind of illustration that I made in the previous videos about reciprocal, that normally in mathematics they say what you do on the left hand side you also do on the right hand side, but here on the market normally we talk about up and down, because that's what the market is doing. It moves in terms of going up and going down. It fluctuates, yes. Even in a consolidation there's still a little movement that it is making, you know, and that movement is up and down. So here we see the market dropping. It gives you a base and then it drops, breaks this support here, goes below, comes back to retest on the support. Okay, and when it retests here, you sell. Where do you put your stop loss? Above the most recent high. Where do you put your target? In the direction projected by the distance of the previous drop. I hope that makes enough sense. Okay, I'm trying to not make this video to be too long, so please, I'm gonna be trying now to be as fast as possible. Okay, so in here we have what you call a rally based drop. Okay, same thing applies. The market goes up, consolidates, breaks the structure, goes to the downside, and then from there it retests on this resistance, which was then the support just before it broke here, and then we sell. What do? We sell there. Where do we put our stop loss? Above the most recent high. Then where do we put our target? In the distance of the previous market impulse. So we spoke about impulse, correction, impulse, rally, base, rally, drop, base, drop. Now we are talking about rally, base, drop. I hope you can sense some difference there, and I do believe you can see this as well, that it is different from these other two that have passed. Okay, so in this case here we now have what we call a drop, base, rally. You see, it's no longer a rally, base, drop. It's a drop, base, and then the market breaks to the upside, comes back, pulls back, and then it rallies. I want you to be aware of something. It will not always be the case that the market comes back to retest exactly at this point here. Sometimes it may turn just above, a little bit above, before it can come and reach this support level here. So what you are gonna do in that case is to look for a confirmation of candlestick, something like the morning star, something like the bullish V pattern. You know them already, because I made sure that I teach you about them in the previous videos. Okay, yes. So let us proceed now. In the next page from now, in the next slide from where I am right now, I'm showing you practicals now on the market. Here I analyzed and found this illustration on Bitcoin 15 minutes time frame, and then as we can identify here is a rally. The market consolidates, breaks to the upside, and then just after it broke to the upside, what did it do? Comes back to retest here. What do we see here? We see two hammers. We see two hammers on the support. That is a confirmation. You buy there, you project the distance, this distance here to the upside, project it to the upside, and then it was going to be somewhere there. That's your take profit. In this case, the market was dropping. This is a drop. It gives you a base, consolidation, breaks to the downside, and guess what? The market retests here with this little wick. Okay, now this was a higher time frame. It was a daily time frame. On a daily time frame, if you can step down to something like 4 hours, 1 hour, 30 minutes, or maybe 15 minutes, you are gonna see something happening here. And just after seeing that, you will be finding your confirmation to the downside. So here in this case, we have a drop, base, drop. Remember that in the future. Let's dive deep. In this case, we have a rally, and then the market started chopping, started consolidating, then it dropped. Mind you, when the market dropped here, what do we see? We see that the following candle, after the candle that broke out to the downside, the following candle gave us a wick to retest on that break of the structure. What do we do here? We sell. And this distance here, from here until where this rally started, in this case it was here, then that is our target to the downside. Our stop loss, it's going to be above the most recent high. It was going to be somewhere here. And remember guys, always follow the trend. So you should be looking for this kind of market phases on, let's say, a certain trend that is big, and then going to smaller time frames to find your entries. It's very good for you to identify higher time frames, because in the higher time frames there's a lot of data that you can analyze from, and from that kind of data, that's where you can easily make decisions whether you buy or sell, or you remain neutral in the market. Okay, so here we had a rally base drop, and then in this next picture here we see a drop, base, rally. Now I want you to be aware that the same thing I explained, that the market may sometimes not come and retest on the support exactly. Here it is here. What do we see here? We see that the market went up, gave us a bearish candle here, and then came back, started going back to the upside. We recognize a morning star pattern, right? We recognize a morning star pattern there. What do? We buy. Why? Because the market broke to the upside and it gave us a confirmation to the upside. And where do we put our stop loss? The most recent low. In this case, it was going to be here, somewhere here. And then when we go to the upside, we check where the distance is coming from, where the market was falling from. The market started falling from this point here. It went down. So here it's going to be our most recent high where the market was coming from, and that is our target. We continue. In this case, we are still talking about rally base rally. Okay, but notice that the consolidation here was not formed by many candlesticks like in the previous examples. Here we see only one candle forming something that is, uniquely identifiable. So what we experience, we can see the market is going up, up, up with similar candles. We have a green candle. Okay, and then we see here what we call a real body doji, which is an indecision candle. It shows that the bulls and the bears were equally matched. Remember, they normally say that the market's movement, it's all about a fight between the bulls and the bears. Some they say it's a negotiation between the buyers and the sellers. Well, whatever that is, here they were equally matched. Now, when you are here, you don't just sell because this is something like a railroad track or something like that. No, you wait for the following candle to confirm. And if the following candle closes as a bullish candle, just like in this case here, what we do, we buy where the candle closes. Okay, the candle opened down here and then it closed high. Then we buy there, and then we are gonna take the distance from the start of the rally, project it to the upside. From the start of the rally to the base, and then we project it to the upside. That is our target. Our stop loss, it goes beyond the recent low, and here it is. So we have here a rally, base, rally, but this candlestick here, we call it an FTR candle, which means fail to return. Why do we call it a fail to return? It's simply because the bears here, as you can see, they tried to push the market back down, but it failed to return prices down. Instead, the bulls took the price upside, and that's just it. Mind you, our nomenclature here says that a bullish FTR is usually a bearish candle. Well, that's not in all cases. Sometimes it will happen that you find that this FTR here is in the same color as these other previous candles. But normally, remember we are talking about under normal circumstances here, you will normally see a bullish FTR being a bearish candle. Same explanation goes to this one here, but in opposite directions, of course. The market gave us a drop, and then a base, and then a drop. So here, when we talk about a base, we are specifically talking about this candle, which is an FTR. Okay, so here the market dropped, and then the bulls, they tried to push their market to the upside, which they failed as the bears closed on them and then started pushing the market to the downside. We see momentum starting to push the market to the downside. The bulls are gaining more strength with each candle that follows consecutively. Then what do? We sell just after the close of this bearish candle here, and then we take the distance from the starting of the drop to the base, then we project it to the downside, and that is our target. As simple as that. The only thing you need to do, guys, is for you to be able to identify this thing on the real market. Now, here is an example of the things that we are talking about here. But before we go to the example, I want to show you something here. Remember, I said this is a rally base rally. Okay, it's an impulse, correction, impulse. Those are the only three phases you will see in the market. You go somewhere, you are supposed to take the second taxi, you decide, should I take it, should I go back, and then you decide to continue. That's it. Okay, so there's something that happens that is so much significant on this zone here, that the market was indecisive. We mark it as an indecisive kind of a zone, which is called a point of interest. Okay, so in this case, the market went up, and of course, we experienced a rally base rally. This is an FTR, it's bullish. You mark this FTR here, and then you wait for whenever the market will return to it. I want you to be aware that it's most likely that the market is gonna bounce before it breaks or before it can go back to where it comes from. So in this case, the market was coming from the upside going down, and then we experience here that the market is anticipated to bounce and go back to the upside. Okay, so that is what normally happens when the market goes back to where there's an FTR. So the market drops, and then when it comes here, it bounces, it fails to break this zone here. Why? Because it's a strong zone, it's a decision point. And you and I know exactly that most of the times in our lives, there are moments when we sit down and make some crucial life-changing decisions. And normally those become our turning points. If your life was somehow, then it changes, you know. Exactly. So in this case, when the market returns to the FTR, we expect to buy. But remember what I always say, guys, we don't just buy just because the market is on a beautiful support. We wait for a confirmation. You're gonna see a pattern of candlesticks here, or maybe just one candle symbolizing buy. Then that can give you a confluence. Okay, that can give you what we call a confluence. So in other words, you don't just buy, you wait for confirmation, which is a confluence. Okay, and then where do you put your stop loss? Well, you guessed it right, below the most recent low, which was below the wick of this FTR here. Okay, and then the market rallies. The first point where the market turned, or maybe if you see another FTR from the upside, then that is going to be your target level. Now, one thing that is happening here in this case is that the market drops, gives you a base, and then it drops again. And as the market drops, it gets to a point where it decides, or whatever that happens, the forces that controls or moves the market, they move the market, return it back, and it goes to the level of the FTR. Now, when the market gets to the level of the previous FTR, always be aware that it's most likely that it's not just gonna break all at once and then go to that direction forever. For example, in this case, it's not something usual for the market to just come and break here. You know, what normally happens is that the market will show you some signs of consolidation when it gets here, or it may even return to the downside. So because you and I know that an FTR is a significant level in the market, what do? We wait for the market to get back to the FTB. In this case, it forms an FTB when it returns and fails to break. But if it breaks this FTR here, then we no longer call it an FTB. Okay, it's something else. So in this case, what we do when the market gets here, we wait for a selling confirmation. As soon as we find that confluence, what do? We sell. We sell, we put our stop loss above the most recent high, and then we project our target to the most recent low. That's it, guys. Simple as that. The only thing you need to do is to train your eyes to be able to see and spot this out on the market. You need to train your eye to identify these things, guys. Okay, here are some examples. These examples here, they show both FTR and FTBs. Okay, as you can see, the market went up here, formed an FTR which was bullish, and then the market failed. The bears failed to take the market down. They failed to return the market to the downside. They pushed to the upside. What do? Just after the closing of this bullish candle here, you buy, and then you put your stop loss below this low here, and then you take the distance from there, from the beginning of the rally, this impulse here, you take that distance, you project it to the upside, and that is your target. Okay, and that is exactly what makes you a profitable trader. Having an edge that gives you an entry point, a stop loss, and a target point. And then we continue. The market drops. As it turned there, it drops, comes back to that same level of the FTR as we have marked it. And then the market here, it gives us a bullish harami. As it gives us a bullish harami, what does it do? It goes back to the upside. It continues. It goes up. So here, we don't just buy. Like I said, it gave us a bullish harami. This red candle and this green candle here, they make a candlestick pattern which is named bullish harami, and it signals a buy in this case. So we buy at the closing of this small candle here, and then we put our stop loss below the most recent low, which was this point here. And then the market went up, and then our previous high here was gonna be our target, and that's it. This thing is fractal in the market. It repeats itself. It happens again and again and again on both higher time frames and smaller time frames. All you need to do is train your eye to be able to capitalize from such movements. Okay, guys, so let us proceed and look at this side. This side, we see something here. The market drops, gives us a bearish FTR, and then it drops again. So if we were to sell, we were going to sell here just after the candle that closed after. We were going to sell on the close of the candle that came after this bullish candle that was trying to push the market back to the upside but failed. So as the market dropped, with this small candle here, as it closes, we sell. We put our stop loss above the most recent high, which was the high of this candle here, and then from there the market drops. It hits our take profit. How do I know it did hit our take profit? Because of this distance here that I projected to the downside. And then just after taking our profit, it gives us another bearish FTR, which is a bullish candle. After giving us that bearish FTR, it drops. It drops and then comes back up to give us now a fail to break moment. You see, this thing, guys, is the same thing as this one here. It's the same thing as this one here. Okay? Because the market dropped, gave us an FTR that is bearish, and then it dropped again, went back up and retested on the support on the level, the resistance level. In this case, we were gonna say this is our supply zone. Okay? And then it goes down. Same thing that happened here. Drop, FTR, drop. Then from there it comes back to the level of the FTR, and then we sell there, and then the market drops. Okay, that's it, guys. This is just as easy as it appears. The only thing you need to do is to be consistent and practice and make sure you identify these things on the market. Okay, this is the last pattern for this course, and it's named a flag. Well, maybe you're asking yourself, why is it that they call it a flag? I'm not really sure why, but in my understanding, I believe they call it a flag because of its flaggy kind of shape, you know? So check this out. The market gave us an impulse, which was a rally, which was an uptrend, and then it started dropping. And as it was dropping, it was consolidating. Although the consolidation here was not happening horizontally, it was happening in a diagonal. You know, this is a diagonal consolidation. So what happens is, you and I know from our previous classes that as soon as we identify 2 points from one of the sides, we can use those 2 points to draw what we call a trend line. Okay, in this case we have this high point and this high point here. We draw this line and then it surpasses, goes here, drops, goes to the right hand side, and then we know that we are waiting for the break of that line, and then we will decide just after the break. If the market gives us a confirmation to buy, we are going to buy on the retest of that support, which was resistance. Okay, so in this case we have resistance, and then we draw an upper trend line. Here we have support, we draw a lower trend line. Then what we notice here is that the market started going up, and then it broke this trend line and then went up again, came back down to retest the trend line. Just here, when the market retests here, that's where we look for our buying signals in terms of candlesticks. We buy, we take the distance of the first leg, which is the first pole, and project it to the upside from where the market broke, and then we project it to the upside. That is our target. Where do we put our stop loss? Below the most recent low. In this case, someone may put their stop losses here on these recent lows here, or someone may choose that now, let me be on the safe side and not put stop losses just very close to my entry, in case the market makes a move that was unexpected, for it not to take my stop losses out. Let me sacrifice and put my stop losses just on that most recent low, which the market formed when it went to the downside. Okay, so if you can notice, guys, ever since I started teaching you about trend lines, you will realize that the explanation is almost the same. Like each and every time when you have the market trapped within a zone of trend lines, it can be a channel, just like in this case here we can see it was a dropping channel. Okay, and then if the market was trapped or it was moving in between two channels, whether they are parallel, diagonal, or maybe they are diverging, then what you notice is that just after the breakout, something significant happens. But like I said, you don't just buy here. You should look for a confirmation via candlestick patterns, or maybe just a single candlestick that confirms for you that now I can take an entry. Why? Because this candle that we call an FTR, it is a continuation candle signal. Like it is a signal of a continuation. So if an FTR appears, just on top of the resistance, then it signals to you that the market has the highest potential for it to go up. You know, if the market was coming from the downside just like here, and then it went up, and then when it got to the resistance here, it gave you a bearish or maybe bullish FTR, whatever FTR, as long as it is this kind of a candle, this we call it a breaker candle. Okay, a breaker candle. So this breaker candle symbolizes the strength that the bulls have. You know, in this case, it was a green one. It shows you that although there was a little bit of indecision, the indecision favored the bulls. And then what do we experience? The market broke to the upside and then it started rallying. So sometimes it happens that just after the breakout here, as the market comes back down to this, what was then resistance but now support, as it comes here, it may give you another FTR again, which may signal for you that the market has a potential to break this support and still continue going down again. So that's why I say you don't just jump into the market, you always wait for confirmations. And make sure to develop trust for your strategy. If you want to trade flex alone in your whole entire life, that is possible. You can tell yourself that, you know what, I have learned to identify this pattern easily more than others. It can be a head and shoulders, you know, it can be a double top, double bottom, it can be any kind of a pattern that you have learned so far from any other course, or maybe you've learned it in this course. Okay, you can master that pattern and use it as your edge. And if you prefer to use them as a collective, then you need to fight and master them. Same thing happened here. The market dropped. It gave us a pole, which was an impulse, and then it consolidated diagonally. It was a correction. We call that a correction. It's a retest. It's a pullback. And then the market broke the support, went to the downside, came back to retest, then support, but now resistance, and then that is where we look for our sell entry, and then we find the confirmation. After finding the confirmation, what happens is that we sell, and then we take the distance of the previous pole, put it on the breakout, project it to the downside, and that is gonna be giving us our target level. Okay, so guys, thank you very much for watching this video to this point. This is the end of our video. Please don't forget to like, share this video, and subscribe to our channel so that you can always be notified. You can always see more and more videos. Click that notification button there so that you'll be updated and move with us as we evolve. Thank you very much. Be blessed, you all.